All right. Good morning, everybody. One day closer to Friday. We're gonna get a little bit of jobs data today. It's the same old weekly data, not really expecting much. The numbers continue to hold in line, and these weekly job numbers are really just a snapshot to see if big companies or corporations are laying people off. Um, and we're not seeing, right? The numbers are staying pretty steady. The other number, it's kind of a bigger deal, is the PMI data today. Last night we saw a pretty strong move on the Asian Open. Things recovered a bit since then, uh, but that was the big move down. 8 o'clock last night, that's when Japan opened, Hong Kong opened an hour later, hour and a half. Nasdaq down 0.5% with the S&P. Small caps down a little more than that, and Dow down the most in the U.S. So it's a broken look, right? This is kind of unusual for us. Usually it's the Nasdaq or the small caps that are leading up or down. And when it's not, when it's blue chips like that, generally leads us back to um, a major influence inside the Dow, just because as an index, the way it's calculated, right? It's these indexes, they're not all the same. They're calculated different. The Dow can be taken down by Walgreens. That's it doesn't have to be something really big. So S&P Flash Services PMI. This is the one right here, this one. Don't get me wrong, the manufacturing has some impact, but what we're watching for here is this previous number. We slipped below 51, 50. 50 is the driver. Below that number is going to put us in a negative place. And one one data point, 1 month, no big deal. But if we get another month below 50, then it starts to imply that we're losing our grip and that things are getting more nasty out there. This wouldn't put us right into recession talks if we do happen to get a number below 50 again. But I would think we will see changes to the Fed projections if we do get a number below 50 again. Now, at that point, we really got to ask, is bad news good news or is bad news bad news? Because if bad news is good news and they start pricing in a rate cut because they think that the bad news will force the Fed's hand and give them a rate cut, then a print below 50 this morning might actually take us to the upside when the market starts to price in those cuts. And that would be bad news is good news. We don't know yet, so I wouldn't try to guess what the numbers are or what direction we're going to move. But I would recommend after the number comes out, you swing back over to the Fed Funds Watch. It's free, right? Just go to Google and type in CME Group or Fed Watch and go to the CME Group. You don't need an account. As you can see, I'm not even logged in. Scroll down and you can see all of the FOMC meetings out into the future. And you just want to look up and down the curve to see where we are now and what they are pricing in today. Wait until after the data comes out and then see if the numbers start to change. we get fluctuations in here all the time. So if it's only changing by 1 or 2 points, it's not a big deal, right? We went from 94.1 to 93.6. Not a big deal, right? It's like a half of a percentage point. So what? And from a week ago, from 94.1 or 92.1 to 94.1, not a big deal, right? But if you go in and you see 25, 35, 40 points change in a day, nah, that's a big deal. That should be something that gets your attention. So after the economic data today, that's what you want to look for. Should be 9:45, get that done. Then we've got some auctions in the front end. You could very likely just chart the IRX and use that. Nothing coming out of Japan tonight, it looks like. We got a lot of that out of the way last night, which accounts for the way Japan opened at 8 o'clock last night. If you're going to trade in the evening, do yourself a favor and pay attention to the news around the world, especially to the nations that are going to be opening up in that trading period. Japan, Hong Kong, Europe, if you're up late enough. Otherwise, the analogy that I use is you're in a room with a blindfold, but you're the only one with a blindfold, and everybody else in that room can see you. You can't see them. I don't know about you, but I don't like that analogy. All right, we got a little bit of White House risk today. It's set to 25 at the moment. It's not bad, but we want to keep our eye on it, see if it increases through the morning. We have a press pool at 3 p.m. Now, this is supposed to be about healthcare affordability, but you know how those things can go off the rails. Yeah. Right? Seems that way all the time. All right, we are still inside of Friday's range. It's very boring. I'm glad I get most of my trading done in the pre-market, so I don't have to worry about trading through the slop that's the afternoon. I mean, if you like trading in this stuff, then by all means have at it. But these sideways days, I'm not really all that interested in them. And right now, this is what we have to get out of. It's about 100 points, 70.80 to 71.80-ish. It's close enough. Get out of this box to get anything else done. Now, at the moment, we're still holding above that white line. It's the 3-period daily moving average. You can see that we've been underneath it every single day this week. We've been underneath it, but we've managed to get back above it every time. Right now, we're right there. We're on it, right? Kind of zoom in and see that white line right there. So if this is going to be the turning point and we finally start to break down, the 10 is our target, 70.52 or 70.50. Break Friday's low, get to the 10, then we start looking for bigger targets. We have not had a good, healthy pullback in a long time. We talked about this on Monday. And it doesn't have to give us one, all things considered, right? It really doesn't. But it would be unusual to not get one at this point. So in theory, from here we could break 7,200 and leg up even higher from here. And that would get us into In theory, 73.83, another 1, 2, 3, 6. Or we could break out and stall around the 11 line, 72.80-ish, right? In theory, we could just keep that upward drive. Otherwise, a pullback is likely, more likely, and that would take us back down to 7,000. Just be mindful that a pullback does not necessarily put us in a bearish posture, and I wouldn't get all bared up with your portfolio and try to short the broader market into oblivion, because it's very likely just going to be a pullback. Either way, we can't stay here. Just like the old bar song, right? I don't care where you go, just can't stay here. So GTFO. Overnight participation at 93,050 is the average. So they were in there getting it done. The problem is, they, for all their effort, they really didn't get anything done last night. Managed to recover from the drop, almost like a liquidity gap close play, but we didn't get back up there. So if we break to the upside, that's going to be a target and a concern level, 71.62. It's the place we started. So with that in mind, be mindful of that. If we do make a run to the upside, that level is very likely going to be hard to get through, unless it's the economic data that shoots us to the upside. Then, I mean, with that kind of rocket propellant, we could just, there's no such thing as pivot points when you got economic data. So this big move is what I was talking about last night when Japan opened. If you're going to be trading in the after hours, at the bare minimum, just understand that there are other nations out there, and that, when they come online, just like our markets, by 8:30, quarter to 9, you've got a pretty good idea if we're bullish or bearish in our markets, right? You kind of have a feeling about how the market's going to open today. Well, golly gee, guess what? If you're trading in the overnight, so will all of those nations. Now, me, I listen to Bloomberg Asia when I'm trading in the overnight, which I haven't done in quite a while, I got to admit. But when I did trade in that time frame, I just listened to Bloomberg Asia. That way you have these newscasters and moderators who are giving you a glimpse into how's the mood over there? What kind of earnings are they looking at? What kind of economic events are they dealing with on their calendar before they open? And are they bearish or bullish? So that by the time their bell rings, you don't get smacked in the face because you didn't know that they were bearish or they were bullish, right? It's free, doesn't cost you anything. All right, we are closer to the lower ADR, and in theory, we already hit it. Now, on this broker, it doesn't show my ADR line having extended all night long, but it does, right? If I was on another broker, it would have been there from Globex last night. And that's what it's calculated on, right? Is that Globex open from last night. So we hit it. If you hit one edge early enough, you can go to the other edge by the end of the day. When we rose up off of that and we failed to get into a Globex high and then get up here and hit this one, and instead we came back down like we wanted to take another bite at that apple, That wasn't good for the idea that we could go up and hit that upper side, but we have been putting in these higher lows. So from that perspective, great. But once we dropped, we were putting in these lower highs, and that's not good, right? Everything's been shifting lower. So this has to break. Now we're getting a bit of a wedge breakout at the moment. Let that wedge breakout continue. The rectangle that was created from the drop, right? This liquidity bar, let that be your center point. We basically need Globex high. Get new Globex high, we could target this ADR up here. It really is that easy, right? Otherwise, look to get back down to the lower ADR line. And if we get underneath that or our own Globex low, then we'll target the other ADR line. As you can see, we're holding above our Globex mid, so that's a good place to start. The cumulative delta was bullish right up until I started streaming, so it's still trying to push, getting back above that VWAP. All right, today's floor pivot higher than yesterday. That's bullish. Price opened above it. That's also bullish. Then we broke down through it, and now we're dancing on it. So this channel is relatively wide. Wide channels imply that if we break out of yesterday's range, it probably won't stick. We already did break out. It didn't stick. We came back in. So far, all of that lines up. The channel top is what we're bouncing against at the moment, kind of struggling to get out of the top of this thing. Kind of zoom in there, right? It's having a hard time getting through that. But if we can get out of this channel, then we can challenge yesterday's RTH high, make that run for the week's high. And of course, we can focus on the SNR lines. Now, we talked about path of least resistance. Seems like we get a chance to do that every day, but I don't think it hurts to go through it again. You don't have to get the calculator out. It should be very obvious. Otherwise, there's really no edge to it. We're basically asking, what's closer, S1 or R1? Now, I can see it, but I'm not watching it on a replay or a stream, right? I don't know how good the stream is, but it should be noticeable that R1 is farther away than S1 is. The more obvious, the better. So if it's really close and you're squinting at it like tea leaves, just give up on it. It's not worth it. Path of least resistance right now is to the upside. The fact that we've already went down to S1 and we broke through it multiple times last night and just kept getting back up above it really shows how much they're defending this level down here. So, because of the economic data, yes, we can break that low and go lower. Absolutely. But it's probably going to take that economic data to get that to happen. So without it, we're very likely going to just try to grind higher again. And if it's good economic data, or if bad is good, right, like we talked about, then we could get to 72 easy. I had a All right, for that downside push, 70.70 is last week's point of control. Break that, we get a little speed bump at 7,000 and then nothing until 68.50. That'll be a fun drop. To the upside, 7,200 and then 7,250. Pretty easy numbers on the upside. To be another 100 points from our current location, nothing to it. And it's blue skies. We've got nothing up there, right? Other than the levels that we already got from our quadrant lines. We could overshoot 72.50 and get into that 72.78, which is the 111, and then see if we reject or not. This indicator down here is the cumulative volume index. Thinkorswim has cumulative volume index. I just took it and I put Bollinger Bands on it, and then I added a couple of moving averages. The idea behind it is to see what's up with the cumulative volume. Now, on TradingView, this is so much better because you're not stuck looking at just one market. I'm looking at the NASDAQ right here because Thinkorswim doesn't give us a lot of choices, right? Here's the exchange, NYSE, NASDAQ, MX. If you're looking at this on TradingView, you have a choice that says look at all of them, and it'll just combine them all, which is really great. We don't have that. So I chose the NASDAQ, and we can see if this is pointing up, just think net buyers, and if it's pointed down, then net sellers. Well, we kind of stalled out. We had the net buyers in control, got above all the moving averages, it fanned out well. We stretched the edges of the Bollinger Band, then we flattened out. So this is what I've been watching for. It's not really much of a surprise that it's flattened out because, we're still inside day IX10 from Friday. But the longer we sit here sideways, the more those moving averages can catch up and we can heal, right? We really did run too far too fast and we need to heal. And that's what we're doing right now. It might not feel good to be sitting here sideways, but it probably feels better than watching your retirement account get whacked when the S&P drops 12%. Yeah. So sitting here healing is a good thing. You like it. You couldn't find what on TV? The cumulative volume index? You should be able to search cumulative volume index. And if that didn't work, then CVI, right? Because that's the acronym for cumulative volume index. And I guarantee if you searched for one of those two, you found the cumulative volume index because it is there. 10-day, 30-minute volume profile in TPO. We're almost there, right? It seems like every day we're looking to narrow this thing up a little bit more, a little bit more, a little bit more. So by Tuesday of next week, we'll have these value areas. That'll be about all we have. The point of control did get moved up. We talked about this for like a week and a half. We finally got it. So now it's up here. I know it's over our head at the moment, but don't let that hold you back. That's kind of a false flag. We can sit here and go back and forth through this thing all day long. It's not resistance per se, right? It's not that kind of level. But it's a zone that we're in. And from this zone, we could leg up strongly again, another 5% higher from here. Not in a day, but I'm talking about just a continued march higher. We hung out here, we healed up after the big move. Now we've brought structure up with us. We got the point of control there. From this structure, we could easily expand higher again. So all of this is a good thing. The bad thing is this shallow area down to 68.50. And I mentioned this earlier in the week. If things were to begin dropping and we break out of this 3-day range that we've been in, well, day 4 now, to the downside from 7,100 to 6,800. All we have is this little bitty bump around 7,000 or 7,050. I don't think it's going to be enough to hold us up or help us out, right? All right, that VPOC, no, just POC, excuse me. The POC from yesterday that we were looking at, it's done. It managed to hold yesterday. We never went down and touched it, but we hit it last night multiple times. We're done with it. We don't have a new VPOC since we cut through that level multiple times. So we got nothing really. If you look at the high up here from yesterday into the close, they put in a lot of work, right? We ran up into a significant wall of sellers. I thought this was worth pointing out because, a lot of times when we run up into a high like that, there's nothing here, right? It's like buyers get exhausted and they just run out of juice, and then we fall back, and it shows it on the profile as being kind of empty. It's skinny here. It's not much to it. Then there's times we run up and we hit something. We hit this big pile of liquidity. There's a bunch of sellers sitting up here, and we hit them. Yeah, huh? We hit some last night. So yesterday. So if we do make a trip back up there today, kind of gotta figure we're gonna have issues there again, right? So kind of put that on your radar. We got multiple zones at this point, right? We have this zone from yesterday, and then we have this zone from Friday. Now, I didn't get that really pretty, and I didn't try to measure it to the tick. It doesn't have to be that big either. But when we checked that level Tuesday, yeah, no, that didn't work. And now they front runned it. We didn't even get there on Wednesday, and they were already defending it. So maybe those sellers are bringing their levels down, right? If they can't get anything sold up here, what are they going to do? They're going to sell it a little cheaper. So that's the level we want to focus on at this point. Got to get through this if we're going to try to get out of this range that we're in. This range that we're in, right? Cumulative volume index. It's under technicals. If you apply that, it shows up down here. Just double click on it. Inputs. What do you want? US total, which means all. Done. This gray line is Friday's close. We're still fighting that level. So this is the IX10 that we're sitting inside of. That's got to break if we're wanting to get anything else done. Earlier this week, we had it mapped on the 50, but the 50 isn't really offering us anything at this point, right? It's not really useful other than as a glance or insight, on whether or not we're above or below. But even that really doesn't have a lot of merit at this point. We're obviously far enough past it that you can see we're above the mid without the line. But other than that, we got nothing. If we do make a run to the upside, though, we have plenty of room all the way up to the top of the weekly expected move, right? All the way up here, 72, 74. Lots of room if we do make that trip to the upside. We could go all the way up there. We wouldn't be overbought, overextended, any of that language. That's how far we're supposed to move for the week. So, Yeah. We are 1.5% above the 10-day moving average. It's not a bad place to be, all things considered. It's a little hot, but we're not burning anything down. At this point, we could move another 1.5% to the upside, and that would get us around 3% away from the 10-day moving average, and that would just about be as far as we'd want to go today. Now we can overshoot that, but it gives us some idea, right? 2% today would be a bit too much, but 1%, 1.25%, yeah, we could handle that. So if we're trying to find where we are outstretched or where too much is, that would be about 2% today. If we make a 2% move, I would flip it. And that's 2% to the upside, right? Not the downside. On the 10 week, we're 4.23%. We've been farther than that this week, so it's not really all that bad at this point. There's a 4% level, right? So we're just slightly above that. And you can see where I've marked 5, we've been even higher than that, even though we don't generally stay there very long. If we get above it, we tend to fall back down underneath it within a day. So from where we're at right now, this is like nosebleed territory. We're up there quite a bit, right? We can't hang out here for a long period of time. We're just going to run out of air. So small trips, short duration, short-term trips, and then we get back down below the line. But because we are off of that high, if we did make a 1 or 1.25% run to the upside today, that would be about as far as we could go. We go that far today, and really we're running out of room. So if we do get bullish and we do make a run to the upside, just keep that 1.25%, maybe 1.5%, as about as far as we could go. Anything beyond that, very likely going to mean revert with velocity. The thing about this morning that's really going to screw people up is the economic data that you're looking for is not at 8:30 today. It's at 9:45. So a lot of people are going to be caught off sides and just get run right the hell over because they don't know anything about it, right? So really watch the clock today when we get into the open. And my concern is that this sideways week has in part been connected to the numbers we're going to get at 9:45 this morning. And that the reason we're not seeing a market maker move yet is because it's not at 8:30, it's at 9:45. So keep your eye out for a market maker move to show up on the ES as well. Looking at what's down this morning, expanded tech, software, Bitcoin, China, gold miners, cloud computing, emerging markets, Mag 7 as a group, China, junior miners, robots, tech, consumer discretionary, growth. If we were looking for a market breadth to give us the rally that we would want, this would send us to the downside very fast. Because all of the regular risk on sentiment triggers that we would use are all negative. And they're all negative by more than 0.5%. But like I've been mentioning for 2 weeks, the market's not being bullied by market breadth, dealer positioning, and all of the 0-day stuff. Instead, it's VIX and commodities, basically crude, treasuries. So I want to keep your eye on those. They are the fuel for this market right now. Looking at what's up this morning, it's basically uranium and chips. Snuck in there, I didn't see it. So chips, Mag 7 down, volume is up. Uranium, VIX, that's it. Got nothing. With all that market breadth that was negative that we were just looking at, look at that fuel. So it again validates or highlights the idea that our market isn't being influenced by the Mag 7, the sectors that we would normally look at, the risk on components, dealer positioning, hedging flows, options. No, none of it. Our market is being influenced by the VIX, by crude, and treasuries. So they are your tail. They are what you want to watch. It's a reasonably decent setup this morning, especially if we can finally get out of this box, right? It's the box we've been in all week. Friday's high has to break. If we can't get through Friday's high, then we're just going to come right back down again. And if we do finally get outside of Friday's high, watch that 111 up there. Because if we're going to reverse, it'll be on the 111 after the breakout. Otherwise, to get there, just like we talked about yesterday's high, and then Tuesday's high, and then Friday's high, right? Each one of those have large footprints. So big structure to work through. If we do reject and start to fall, get through the mid of our own Globex, then Globex low, Tuesday's low, and on down we go, right? That's what I got for you guys. Be careful, be safe. Watch the clock. That 9:45 one, that's a sneaker. And I'll see y'all tomorrow.